Hello and welcome everyone to the Quality Investor. As earnings season ramps up, I will be providing commentary for each of my holdings and how they fared financially in the most recent quarter. This is a way to provide context to each business's earnings and to assess if my investment thesis remains intact. Yesterday, one of my larger holdings, UnitedHealth Group, ticker UNH, was first on the docket with their Q3 2023 earnings. UnitedHealth Group posted a very strong quarter. I was pleased with top and bottom line growth, and management conveyed a healthy optimism about their long-term outlook on the earnings call. Before we dig in, my investment thesis for UnitedHealth Group is very simple. UNH dominates the health insurance space, which gives them monopolistic qualities and pricing power. In short, a very strong economic moat. UNH strengthens that moat via complementary acquisitions that grow market share, diversify revenue streams, and gain access to new and innovative technology, keeping their competitive edge. Excellent management that uses capital wisely and efficiently, shown by continual growth in ROIC, as well as gross operating and free cash flow margins. And the final point of my investment thesis, they compound free cash flow, which allows UNH to reinvest or acquire smartly and reward shareholders via dividends and share repurchases. All right, let's get into the earnings. But first, if you enjoy content like this, please hit that like button and subscribe to the channel. Join me in building a vibrant community of investors focused on quality businesses and fundamental analysis. I thoroughly enjoy creating content like this and love exchanging and sharing ideas with other investors. Okay, so first I want to point to their stock prices at $539.40 right now. It's up 2.52% at close from Friday. Up because they had a very healthy beat against Wall Street expectations. You can see here they beat their earnings per share by 3.34% and they beat the revenue by 1.4%. And they expected $6.35 for earnings per share, and they reported $6.56. And for revenue, Wall Street was expecting $91.4 billion, whereas UNH posted a very attractive $92.36 billion for this quarter. That adds to their already long history of earnings beats. So not only did UNH post a very strong quarter, each of their segments is growing very nicely. You can see here that UnitedHealth Group's third quarter 2023 revenues grew 14% to $92.4 billion year over year, including double-digit growth in both Optum and United Healthcare. Optum is their pharmacy segment. The only real weakness I saw in this earnings report was that their third quarter medical care ratio, which is medical expenses as a percentage of healthcare premiums collected, that was at 82.3%, which was up from last year from 81.6%. We want to see that ratio down a little bit. That indicates they're holding on more of their premiums than what they're actually paying out. And the other slight quibble I have with their earnings, you can see that here their net margin did decrease very slightly, 2 basis points, but very slightly from the third quarter of 2022. But it was up from previous quarter of 5.9 in June. If we take a look at what their segment reporting is, so we can see that you can see that growth here. So 3 months ended $69.8 billion versus the $61.9 billion. And then 9 months ended for this year so far, $210 billion versus the $186 billion. This is for the United Healthcare segment. And the Optum segment also had very strong growth. We saw that $56.7 billion over $46.5 billion year over year for 3 months. And then the 167 versus the 134 on the 9 months ended basis. Just very strong across the board growth here for United Health Group. And the one thing I pointed out earlier was that margin decrease here that happened primarily in the Optum segment, 6.9% operating margin versus 7.9% year over year last year. And it's also slightly down for the year. In my view, that points to the medical care costs rising a little bit in this quarter and throughout the year this year than what we saw last year, resulting in that lower margin so far. So coming over here to their cash flow statement, we can see that they had a very nice operating cash flow this year, or this quarter, I should say, at $34.26 billion. And if we back out our purchases of property, plant, and equipment, and so forth, that's $2.47 billion. That gives us a $31.8 billion in free cash flow. And we compare that to the 9 months ended last year in 2022, that 30.7 billion less that 1.9, that's 28.8 billion last year. So they grew their cash flow so far by $3 billion through 9 months. So just great free cash flow growth, which of course they use so wisely. So common share repurchases, one of the big parts of my thesis here, 6.5 billion compared to 6 billion over the 9 months of last year. So just they're doing great things to reward shareholders and reinvest that free cash back into the business. So I mentioned earlier in the video that management had some very healthy optimism on their earnings call. Well, let's point out some of the things. This is their transcript here. So as a result, direct result of their mission-driven focus this year will serve even more people more comprehensively than anticipated in the outlook we offered at the end of 2022. By the close of this year, they'll serve 900,000 additional patients for their UnitedHealth segment, almost 1 million new consumers across UnitedHealthcare's Medicare Advantage offerings. So I want to take a moment and mention here, if you watched my UnitedHealth Group's analysis video where I valued their stock, I mentioned that one of their biggest primary drivers for future growth is going to be the senior citizens, where a lot of the boomers, they're starting to get into that 65 age where they qualify for Medicare. And so this shows here that they're getting those people into the program, 1 million new customers, and then a total of more than 1.5 billion scripts to people who rely on Optum Rx. So due to that better than expected growth they've seen so far this year, management has, based on this performance, we are strengthening our 2023 adjusted earnings outlook to a range of $24.85 to $25 per share. The confidence we had in our sustained long-term growth outlook is exemplified by the 14% third quarter revenue increase we reported this morning, more than $11 billion above last year. The sources of this growth will drive many more years of strong performance. So a couple other things I thought were pretty interesting when I was listening to the earnings call is management of, like every other company these days, everyone's getting into AI. It's biggest, the hottest thing that's out there. And UnitedHealth Group is no different. So on the earnings call, the management mentioned our teams are significantly improving how quickly we respond to the millions of benefit questions we receive each year. We are using AI and natural language processing to expedite call documentation, to rapidly generate accurate summaries of consumer interactions with our contact centers, saving millions of dollars in administrative work and freeing up capacity for our people to prioritize engagement. We're also utilizing these technologies to translate and interpret unstructured data, such as physician notes, which will help, for example, provide a deeper insight for life sciences customers so they can better assess the efficacy of their treatments. So it certainly remains to be seen if a lot of these investments that UNH is making start to pay off. However, if they do, we should see some very nice help to boost their margins. And of course, that will always help out that bottom line ultimately and what we as investors can get on a per share basis. So one last note about the earnings call here. The CEO, Andrew Whitty, gave a quick update about what he sees for next year in 2024. He said, at this distance, analyst earnings estimates for 2024 reasonably reflect the performance view we expect to offer in November, with consensus near the upper end of our likely initial outlook range. Importantly, the growth we are realizing today and our expanding capacities serve to further reinforce the confidence we have in our long-term 13% to 16% growth objective. That is an excellent growth year over year for a company the size of UnitedHealth Group. Remember, they are worth nearly $500 billion, and that is staggering growth to expect going into the future for a company that size. So after listening to that earnings call and looking at these numbers, I went through into my UnitedHealth valuation, and I updated some of the metrics that I was using here. I won't go through the whole valuation again, but I just want to point out I am now projecting them to end the year, December, with $365 billion in revenue compared to my initial projection of $357 billion. I also was projecting about a 7% increase, compounding annual growth rate for revenue over the next 10 years, and looking at 7.09 now. And I slightly raised my free cash flow compounding annual growth rate to 8.56. It was at 8.5 before. So after making those tweaks to my financial valuation, I left everything else unchanged. Nothing else seemed to be affected by this strong performance here. We did get to an acceptable buy price now of $549.45. My prior valuation had an acceptable buy price of $547.35, so about $2.10 higher after adjusting my valuation for the latest results. So all in all, it was a great quarter for UNH, and I'm very happy for them. I hope they continue to execute on their growth strategies. But before we go, I do want to emphasize this is not financial advice, and I do own a sizable stake in UnitedHealth Group. With that, thank you for watching today's video. And what do you think? Comment below and let me know your thoughts. I love the feedback. Also, please hit that like button. And if you found this info helpful, subscribe to this channel and join our investment community. Thank you and happy investing.